This week, let's dive straight in here. This was FOMC week. So this was the week that the United States, the FOMC basically is the meeting that decides the interest rates on a federal level. So if interest rates are going up, it makes money more expensive to borrow for businesses. Generally, higher FOMC rate announcements tend to make the market sell off as people escape out of equity assets and into cash, because cash is paying a lot more in interest. So that was this week FOMC meeting came in, and the numbers were consistent, as in they did not go up, they did not go down. We are still
that's what the market expected, right?
Exactly.
Right.
Just as expected, right? Yeah. Exactly. So before all these FOMC meetings start, there's always analysts' projections of what they think will happen. And generally speaking, those projections are pretty accurate. And also, generally speaking, when those projections are not accurate, we can see quite a bit of volatility. For example, if we were expecting the market to hold consistent, and then instead the Federal Reserve decided to cut the interest rates down, that would have given us a big green spike in the market, as traders would have rushed deeper into equities, because it would imply that money is getting cheaper on a business level to borrow again, and therefore the money printer is being turned back on, as the Wall Street bet community likes to say. But either way, this week FOMC meeting happened. We got our consistency confirmed, so we are remaining at 5.5% interest on a federal level, and we have pulled up here the SPY, which is the S&P
on the left side.
Yeah,
we closed bullish. I mean, yes, like you said, because it was expected. So I think next week it's gonna pull. It probably gonna pull back a little bit, and like SR, basically SR flip it.
SR flip that orange line you have drawn out there. So we're trying to, exactly. We're looking
something
for
like this.
We're basically looking to turn that orange line into the bouncing board where we're going to move up higher. And that line is very much, pretty much the top of the last bull market, I feel like, if you were to zoom out a little, right? Like,
no, we're like way above.
Oh, we're way, I was thinking crypto charts. Yeah, we're way into all-time highs.
The SPY is like,
let's go.
Been making new highs.
And it seems to still be on trend to continue that. So like you said, we're looking at a bullish close for the week. It is also bullish news to get a consistent FOMC rate. So just the fact that the rate didn't get cut or didn't get increased, that's good news, generally speaking. Yeah. And the market was expecting that news. After the meeting, the following day, there was also the press conference where Jerome Powell, who is the chairman of the Federal Reserve Board, he basically gave his sentiment speech, which I kind of got the sense of like it was more of the same, which he usually is saying.
Yeah, usually he doesn't, he doesn't like.
He doesn't really hint one way or the other.
Just because they don't want the market.
In the past, when he kept rates consistent, he would always in the meetings be like, raising the rates isn't off the table yet. They might still need to, where basically his whole sentiment is always like, we're monitoring inflation and we're going to keep a close eye on it, and we're going to do what it takes to make sure inflation stays in check. Of course, also this last week we got the CPI report, we got unemployment numbers. Big week for like market in general, like information that helps decide the direction of a market, especially on a macro kind of a trend. And so all those numbers also came in around the estimations that they were projecting at. So there was, while the numbers themselves might not be amazing, that's not really the point. The point is that the numbers were in line with what the market was expecting. And because the expectation wasn't upset, neither is going to be the direction here. So we do still have runway to keep moving up here in our S&P 500 index here with the SPY, which Sid has drawn out here. Very likely to see a little bit of a pullback on that weekly chart to basically create an SR flip around 5,036. I'm sorry, 536.